Picture waking up to a life where you don't worry about money anymore. You've paid your bills, your dream life is real now. And do you know what made it all happen? Dividends did. In 2020, big companies in the S&P 500 gave their shareholders more than $58 billion every month. Imagine if I said that historically dividends made up a big part of how much money people made in the stock market. A massive 42% on average. So the next thing is, how can we use this amazing way of growing wealth to get a monthly payout of $4,400? Stay with us because we're going to show you how. Today, we're going on a trip following the advice of a finance hero, Warren Buffett, to find the quickest way to be free from money worries. We aim to turn your investments into money that comes in regularly through dividends, aiming for $4,400 every month. Let's get into the video right away. To start, let's learn about dividends and why they're so important for getting financial freedom. Like Warren Buffett, a great investor once said, "If you don't figure out how to make money while you sleep, you'll work until you die." Dividends are your way of making money even when you're asleep. And here's how it happens. When you put your money into a company by buying its stock, you become a part of that company. Now, when that company earns money, which we hope it does, it has choices about what to do with those earnings. One choice is to give some of those profits to the people who own its stock. And that sharing of profits is what we call dividends. Dividends usually get paid out regularly, like every 3 months, but some companies pay them every month or once a year. Normally, they come as cash, but they can also be more shares of stock, which we call stock dividends or dividend reinvestment plans.
The answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Warren Buffett stresses how crucial it is to create a solid portfolio. He mentions spreading out your investments is like a shield against not knowing. But if you understand what you're doing, it might not be as necessary.
We had more reason to retain all of our earnings. If See's Candy were a standalone company, we would simply pay out a lot of the earnings, practically all of the earnings and dividends, just like we do now, except it goes to Berkshire. We like the companies in which we have investments to pay to us the money they can't use efficiently in their own business. In some cases, that's 100% of what they earn. In some cases, it's 0% of the earn. We own some stocks that don't pay any dividend.
So how can we create a strong dividend collection? Making a dividend collection that lasts a long time needs a smart plan. Let's go through the important parts that will help you make a strong money-making system with dividends, just like Warren Buffett suggests. First thing, picking stocks that pay dividends. One of the first things to do is to pick stocks that pay dividends carefully. Look for companies that regularly pay dividends or even increase them over time. You often find these in areas like things people use every day, services like electricity or water and healthcare. Doing research is really important here. Understand how well the company is doing financially, what makes it better than others, and how it keeps making money to pay dividends. Second thing, spreading out your investments. Buffett really likes this idea. It means putting your money into different areas of business to lower the risk. Don't put all your money in one place. When you spread out your investments, if something goes wrong in one area, it won't hurt everything you put your money into. Remember, even though dividends can give you money, the value of what you've put your money into can go up and down. So spreading things out keeps you safer. Number 3, long-term perspective.
If you had a punch card with only 20 punches, you weren't going to get another one the rest of your life, you would think a long time before every investment decision. And you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.
Buffett is known for how he invests in the long run. He once said, "The time we like holding on to something is always." Thinking about dividend stocks this way is really important. Dividend money can grow a lot over time, especially if you put that money back into what you've invested. This makes your money grow even faster as time goes by. Fourth thing, thinking about risk. Another idea from Buffett is to stay away from companies that owe a lot of money or companies that often reduce the dividends they pay. These could be warning signs for how safe your investments are. Look for companies that have a strong financial situation and have managed to stay okay even when the economy isn't doing well. Fifth thing, checking and changing things. Lastly, look at your investments regularly. Companies can change, and how the economy is doing can change that too. Change things in your investments when you need to so that they still match what you want to achieve financially. By following these ideas, you can make a really strong collection of investments that pay dividends. This could give you money regularly and help you reach what you want to do financially. Okay, let's be practical and figure out how you can make your dream of living from dividends come true. We'll explain the actions and plans you can use to get to that amazing $4,400 every month from dividends. Keep in mind that the aim is to have your money do the work for you, just like Warren Buffett has talked about a lot.
I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically.
Let's explore the first step to living off dividends: investing in blue chip dividend stocks. These stocks form a stable base for your finances, known for their reliability and consistent dividends. Blue chip companies, endorsed by Warren Buffett, offer financial stability, weathering economic ups and downs. Buffett emphasizes temperament over intellect for investors, advocating discipline and long-term commitment. Instead of chasing trends, focus on resilient companies with solid track records, substantial market shares, and decades of rewarding shareholders with consistent dividends. This approach ensures stability and aligns with Buffett's enduring wisdom. Including blue-chip dividend stocks in your portfolio sets the stage for a reliable income stream, aligning with Warren Buffett's approach to long-term quality investments. These stocks offer stability, income, and potential long-term growth. They're a proven route to living off dividends and attaining financial goals. Consider adding these dependable dividend payers to your portfolio today. Our second strategy focuses on dividend growth stocks. Unlike stable blue chip stocks, these grow dividends consistently. Buffett's wisdom emphasizes self-investment, akin to seeking companies dedicated to their growth and increasing dividends. These firms often operate in expanding industries, prioritizing reinvestment in research and rewarding shareholders. Dividend growth stocks' allure lies in compounding power, elevating income both in dollars and as a percentage of your initial investment. This compounding effort speeds up the journey to financial independence. Though dividend growth stocks might not offer the highest initial yields, their potential for substantial long-term income is unmatched. These stocks favor investors who grasp the power of compounding and are patient for results. As investments grow, so does income, making it an effective strategy for those aiming to rely on dividends. Investing in such stocks fits Buffett's focus on continuous learning and long-term thinking. It's not just about buying stocks, but investing in your financial future. Consider adding promising dividend growth stocks to pave your way to living off dividends. Our third strategy is introduced called exchange-traded funds, or ETFs. These funds blend stocks and options, offering a powerful income strategy. Buffett's wisdom about the stock market favoring patient investors holds here. Covered call ETFs combine dividend stocks with selling call options on the same stocks, boosting potential monthly dividends. These ETFs hold quality dividend-paying stocks while selling call options, earning premiums distributed as dividends to investors. This income strategy blends both investments for potential gains, aligning with Buffett's patient approach. Selling call options limits the potential gains for stocks in the portfolio. If stock prices rise considerably, the ETF might have to sell shares at an agreed-upon price, missing out on extra profits. Covered call ETFs suit investors willing to trade some upside for consistent dividend income. They're ideal for income-focused investors seeking added dividends with lower risk. These ETFs boost income from existing holdings without changing the investment approach significantly. Consider some examples of covered call ETFs yielding around 12% annually. XYLD, Global X S&P 500 Covered Call ETF, offers yield potential from S&P 500 stocks by selling call options, maintaining exposure to large-cap U.S. stocks. OILK, ProShares K1 Free Crude Oil Strategy ETF, invests in crude oil via futures contracts and covered call options, offering notable income potentials in commodities. EWZ iShares MSCI Brazil ETF, while not a covered call ETF, it invests in Brazilian stocks. Exploring similar ETFs focused on specific markets like Brazil adds diversification to your dividend strategy. In summary, covered call ETFs present a distinctive method for generating investment income. By heeding Buffett's advice on patience and weighing income versus potential gains, these ETFs serve as a valuable tool on your journey towards living off dividends. Incorporating them into your portfolio diversifies income sources, potentially speeding up your path to financial independence. Now let's crunch some numbers. To reach a $4,400 monthly goal with a 12% yield from covered call ETFs, first calculate the yearly income needed, $52,800. Dividing this by the yield percentage gives the total investment required, approximately $440,000. Comparatively, using a more common 3% yield from traditional dividend stocks requires an investment of around $1,760,000 to yield the same annual income of $52,800. Covered call ETFs could necessitate a lower investment for the same income goal. The math shows that to reach $4,400 monthly, invest $440,000 in covered call ETFs at a 12% yield, or $176,000 in traditional dividend stocks at 3%. Traditional dividend stocks demand a much larger investment for the same income as 12% yield covered call ETFs. Covered call ETFs offer higher yields, appealing for income with a smaller initial investment. But consider risks. They may lack capital growth versus traditional stocks. Diversification and personal goals shape your strategy. Consult a financial advisor for tailored advice matching your needs and risk tolerance. Remember, the journey to living off dividends is a marathon, not a sprint. Your choice should match your goals, risk tolerance, and investment horizon. Both methods hold merits. Patience is key.